Hello everyone, and thank you for joining today's True Trading webinar. I'm excited to be here with you. My name is Mohammed Azim from Traders United. Just disclaimer. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I am a certified elite wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of elite wave theory. In addition to my work as an analyst, I am also an author and educator. I wrote Introduction to Elite Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at elite wave. Over the years, I have expanded my knowledge into a broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the forex markets. With that, let's dive into today's session. So, these are the session goals. Let me talk about macroeconomic events and data releases. I'm going to cover previous week fundamental analysis. Okay, the first one is the overnight rate related to Canada, and I'm going to discuss the USDCAD currency pair. Next one is the unemployment rate in Australia, and I'm going to discuss the AUDUSD currency pair. Now, what is the overnight interest rate in Canada? The The Canada's overnight interest rate is the Bank of Canada's key policy rate, which influences short-term lending between major financial institutions. It serves as the primary tool for guiding monetary policy, affecting borrowing costs, consumer spending, business investment, and ultimately inflation. A higher rate signals tightening conditions to control inflation, while a lower rate reflects easing designed to support economic growth. Now, on September 17, 2025, we got the overnight interest rate data report. The previous number was 2.75. The forecast was 2.5. The actual number we got is 2.5. Now, the markets widely expect the Bank of Canada to cut its overnight rate from 2.75% to 2.5. Such a move would indicate that policymakers are prioritizing growth concerns over inflation risks, aligning with recent global central bank easing trends. So we got an actual number of 2.5%, and the forecast was also 2.5%. So this confirms expectations of a modest policy easing, and this likely results in a limited initial market reaction. So the forex market focus may shift to the accompanying policy statement and forward guidance. So the conclusion is on the September 17th, 2025, the overnight interest rate decision uh, watched by different forex traders uh, with a caution suggested that the USDCAD is probably going to, move a bit sideways. Now let me show you the chart of USDCAD currency pair. So this is the chart of USDCAD currency pair. Now let me show you what happened on September 17th. So September 17th, we got kind of a bullish price action in USDCAD currency pair. And market was kind of expecting a sideways price action, but overall we got a bullish rally in USDCAD currency pair. Next one is the unemployment rate, Australia. And let's talk a little bit about it. What is the unemployment rate? Australia's unemployment rate measures the percentage of the labor force that is without work but actually seeking employment. It is one of the most important indicators of labor market strength and overall economic health. A lower unemployment rate typically signals stronger job creation and confidence in the economy, which tends to support the Australian dollar. A higher unemployment rate suggests weakening labor conditions and may weigh on the currency. Now, on September 18th, we got the unemployment data report. The previous number was 4.2%, forecast was 4.2%, and the actual number we got is also 4.2%. So we were expecting kind of a sideways price action, but what happened is that market kind of moved a bit sideways. Let me show you the chart of AUDUSD currency pair. So Aussie dollar was going up, and then we got the drop on 18th. So we were expecting, a sideways price action. So price action was going up in Aussie dollar currency pair, and then we got the drop in price of AUDUSD currency pair. This is what we got. Now let's take a look at previous week global market trends, and I'm going to discuss the euro dollar currency pair and USDCHF currency pair. So let us take a look at euro dollar. This is the chart of euro USD currency pair. Overall, the trend looks bullish, and we might get further upside in euro dollar currency pair. The next one is the US dollar Swiss franc. The overall trend is down, and the way I see market is probably going to drop more. Now, let me talk about the current week's macroeconomic events and data releases, and I will be covering the key developments in the forex market with a focus on fundamental analysis. The first one is the Swiss National Bank policy rate related to Switzerland, and I'm going to discuss the US dollar Swiss franc currency pair. The next one is the GDP, gross domestic product, monthly, month by month basis related to Canada, and I'm going to discuss the USD-CAD currency pair. Okay, what is the SNB policy rate? The Swiss National Bank, also known as SNB policy rate, is the central tool used to guide short-term interest rates and steer the stance of monetary policy. It directly influences borrowing costs, liquidity conditions, and the broader performance of the Swiss economy. Now, changes in the policy rate have a decisive impact on the Swiss franc. A higher rate typically strengthens the CHF by attracting foreign capital and signaling tighter policy, while a lower rate tends to weaken the currency as investors seek higher returns elsewhere. So on September 25th, 2025, at 7:30 a.m. UTC time, the previous number we got is 0.0%. The forecast is also 0.0%. The actual data not yet released. Now let's talk a little preview and expectations. Well, forex markets widely expect the Swiss National Bank to keep its policy rate unchanged at 0.0% in the month of September 2025. With inflation moderating and growth remaining subdued, the central bank is likely to maintain its current stance rather than tightening further. However, investors will closely monitor the Swiss National Bank's statement for signals on future policy direction. So, any language suggesting concern about inflation persistence could keep markets alert to the possibility of a rate hike in the year. Conversely, emphasis on weak global demand, sluggish domestic growth, or stronger CHF appreciation risks may reinforce expectations that the Swiss National Bank will stay on hold for an extended period. Now, the Switzerland safe haven status also plays a critical role. In times of global uncertainty, the CHF tends to strengthen regardless of monetary policy, which complicates the Swiss National Bank's task of balancing price stability with currency competitiveness. Now, the potential market impact is if the Swiss National Bank hikes the uh, interest rate, meaning makes it greater than 0.0%, then that would be a surprise hike and that would likely strengthen the CHF sharply, pushing the USD Swiss franc lower as traders price in tighter conditions. If the SNB holds the interest rate unchanged, meaning 0.0%, that outcome would align with expectations. Market reaction may be limited unless the accompanying statement shifts tone on inflation or growth risks. US dollar Swiss franc could trade sideways in this scenario. Now, if the SNB cuts the interest rate, meaning makes it lesser than 0.0%, although unlikely, a surprise rate cut would weaken the Swiss franc considerably, sending the USDCHF higher as investors anticipate prolonged monetary easing. So the overall analysis is the SNB is expected to remain cautious as it navigates between moderating inflation and fragile growth prospects. Holding the rate steady at 0.0% reflects a balanced approach aiming to support economic stability while preventing excessive Swiss franc strength. The real forex market driver will be the policy statement, which could hint at whether the SNB is leaning towards future tightening or maintaining its accommodative stance. So the conclusion is ahead of the decision of this interest rate, USD Swiss franc may consolidate within a narrow range as traders await clarity from the Swiss National Bank. Once released, the policy outcome and accompanying guidance could spark sharp moves, especially if the tone deviates from expectations. The September decision will be likely in shaping sentiment towards the CHF heading into the final quarter of year 2025. The next one is the gross domestic product, GDP. M over M means month over month related to Canada. Now, what is GDP M over M? The gross domestic product month over month measures the change in the total value of goods and services produced in Canada compared to the previous month. It is one of the most important indicators of economic performance because it reflects whether the economy is expanding or contracting. A stronger GDP reading typically supports the Canadian dollar as it signals improving business activity, healthier labor markets, and greater potential for higher interest rates from the Bank of Canada. On the other hand, weaker or negative GDP results often weigh on the CAD since they raise concerns about slowing growth and may increase expectations for monetary easing. Now on Friday, September 26th at 12:30 p.m. UTC time, we're going to get the financial data release. The previous number we got was minus 0.1%. Forecast is 0.1%. The actual data not yet released. So the forex markets are looking is looking for the Canadian economy to return to modest growth in July, with GDP forecast at 0.1% after a 0.1% contraction in June. This anticipated rebound is expected to modest compared to prior months, as mixed signals continue to come from the domestic and global economy. Stronger performances in energy exports and parts of the manufacturing sector could support the recovery, but household consumption and real estate activity remain relatively soft. The global headwinds, including uncertainty around trade flows and slower US growth, may also limit the scale of Canada's rebound. This release carries added importance since the economy is coming off a weak second quarter. A positive print, even if modest, could help restore confidence that Canada is avoiding a deeper downturn. However, another negative surprise could reinforce concerns that the slowdown is more entrenched than initially thought. Now, the potential market impact on USD-CAD currency pair is: if GDP is higher than expected, meaning greater than 0.1%, a stronger rebound would likely boost the CAD by lowering the odds of near-term Bank of Canada interest rate cuts. In this case, USD-CAD could move lower as markets reprice policy expectations. If GDP matches expectations and we get a 0.1% number, then it is in line result, and that may spark a strong market reaction. USD-CAD could consolidate, with traders awaiting additional catalysts such as upcoming employment or inflation data. Now, if the GDP number is weaker than expected, meaning less than 0.1%, a softer figure, especially another contraction, would heighten concern about Canada's economic resilience. This would likely fuel expectations of Bank of Canada policy easing and push the USD-CAD currency pair higher as the Canadian dollar weakens. So the overall analysis is, with the Bank of Canada's balancing sticky inflation against fragile growth, this GDP report will be a key input for policy makers heading into the final quarter of 2025. Even a small rebound would signal some resilience in the economy, supporting the case for keeping rates steady. However, back to back contractions could tip the balance toward easing, particularly if inflation also shows signs of cooling. So the conclusion is, ahead of the release, the USD-CAD may remain in a consolidation phase as forex traders position cautiously for the outcome. Once the financial data is published, the market reaction is likely to be sharp if the results diverge significantly from the forecasts. The September GDP reading will play an important role in shaping expectations for Bank of Canada's policy and the broader financial outlook for the Canadian dollar. Next, let us take a look at current week global market trends. Okay, we're going to start with Euro USD. So this is the chart of euro dollar currency pair, and the trend is bullish. It's an uptrend. The next one is the 4-hour chart. The 4-hour chart looks a little bit bearish, and we might get further drop in price action. Next one is the US dollar Swiss franc. US dollar Swiss franc, the trend looks down and we might get a short-term bullish leg, and after that I expect further weakness in price action. It's a downtrend going on in USDCHF currency pair. Next one is the USD CAD. USD CAD currency pair, you can see it's moving sideways. So we might get a bullish leg over here. Uh, and the way I see, this is the support. So if price action is going to break below the support level, then the chances are high that USD CAD is going to drop. Next one is the spot gold. Spot gold, let's take a look at spot gold. The trend is up in gold. Market just keep going up over here. So XAUUSD pair, I was kind of expecting a short-term bearish pullback, but price just keep going up. Okay, so I think that's the end of today's session. If you have any questions, feel free to type inside the chat box and I will be happy to answer your questions. So let us review what we have learned today. We discussed about the SNB policy rate related to Switzerland, then also discussed about the GDP month over month related to Canada, and we discussed the USDCAD, and then I also presented the forecast related to euro dollar, USD Swiss franc, USDCAD, and spot gold. These are the assets to watch out for profits. What you should do next? Well, stay tuned for the schedule of next week's trading webinar. You can subscribe to our social media pages to stay updated with true exciting events, trading content, and market insights. If you want to learn more about trading, visit TradeGeek and access free trading courses for beginners, intermediate, and expert traders. Thank you for hanging around. See you at the next trading webinar on Tuesday, September 30th at 2025, 12 p.m. UTC, same time. So that's it from my side. Have a nice day and bye bye.